I want you to substitute now demand at the bottom of this little sideways channel and supply at the top of this little sideways channel. And if you do that, then you could see where when the market was going sideways between these two areas, there was no trend. And obviously the next trend for this particular asset would be if it broke out to the upside, it would begin to trend higher as it did here on the end of the chart. And if we go back up to the top of the chart area, once again, you're going to see an area that says trading range. You're going to see resistance level. You're going to see support level. And, of course, we're going to substitute now instead of support and resistance. We're going to substitute demand and supply. And we're going to say, okay, when the market's trading sideways here, there is no trend. And then once the market breaks out of the channel to the downside, we begin a bearish market phase or a bearish market cycle. All right. And I call this a cyclical trend, folks, because it has a cycle that's pretty much repeatable. It's repeatable in pretty much every asset that you could think about. I want you to look at this picture really quick, and I want you to compare it to this picture right here. And obviously, this is an asset from 2009, Apple Computer, and it's a chart where Apple Computer was going sideways for a period of time between 2008 and 2009, and it broke out into a bullish market phase, and off it went. It began to trend higher, and it trended higher all through 2008, 2009, 2010, 11. All right, and of course, it didn't go straight up. We kind of went sideways and down a little bit during this uptrend. We had little periods where we went sideways and then up again, sideways and up again. All right. So we began what we call the bullish market trend for Apple Computer. And obviously, we'll go to the dollar versus the yen because we have a similar picture coming up here shortly. Back in 2009, when the market trend began, I sort of explained to the students at Online Trading Academy, just like I'm explaining to you, that once this happens, we begin a new bullish market cycle. Okay? But let me go back here a little bit further, and let's explain the psychology of everything that you see happening here. And the psychology of everything that you see happening here is probably important too, because when the market was down near the lows back in 2008, and it could be any market, it doesn't have to be just a stock market, it could be any asset, your emotions are pretty much exactly where you see they are right here. Near the bottom of that bear market, we had a lot of people telling you that it was time to dump everything, and you might have been thinking about selling everything yourself, and some of you may have even sold everything yourself, got out of the market. So it was very, very difficult during that period of desperation and pessimism. Very, very difficult to be even remotely interested in buying anything because the market had fallen so hard, and for some of us, it had fallen the second time in 10 years. So, a lot of people were worried about getting burned. So even though Apple was near the lows of that chart, and even though the dollar yen that I'm going to show you here in a minute was near the lows of those charts and whatever, nobody really wants to buy when everything is down. And the hardest thing about what we do and what we teach at Online Trading Academy, the hardest thing is to get students to understand that this is a repeatable cycle that you're gonna go through probably for the rest of your lives, unless of course you get too big on the first time up, and then maybe you won't have but one time, But when I look at this chart, I also look at where we currently are in the stock market, and in many parts of the world, it's the same thing. We've had a nice big bullish phase. We were up 30% in our stock market last year, and there were a lot of people telling you this is going to go up forever. It's it's a great time to get in. Use this opportunity right now as a buying opportunity. This is easy. Let's borrow money to buy more. These are the emotions you're going to have when the market is bullish. And as a currency trader, as a stock trader, as any kind of a trader, if you let the greed get to you when the market's going up and you really believe that, markets are going to go up forever and they're just going to keep rising and rising, you're probably not going to last more than once, maybe twice if you're lucky. And then, of course, if you're going to ride everything down and suffer that pain of riding everything down because you believe in this stuff, right, you may not last very long. So hopefully by listening to Sam talk about demand and supply levels when he comes on here and talks about how important that is, and then putting that together with your emotions and with the market cycles of all the different assets, hopefully you'll be on the right side of a trend if and when the market does change and turns around.